In this video, we're going to talk about stacking layers of edge, which are candlestick patterns, bearish candlestick patterns with downtrend to improve our probability of success. Hey traders, a very warm welcome to you. So we are now part 6 of the video series. In part 5, we talked about the candlestick patterns going with an uptrend. Now let's flip on its head and let's look exactly the same, even the same chart, but if we were to use a bearish candlestick pattern and we were to align that in a bear market or in a downtrend, how much more powerful that will be. Twitter, this kind of bearish candlestick formation will be getting intraday move, push to highs. We talked about that. Go and check out the previous video. If we get that and we are in a downtrend, we're all good. And actually, I've noticed this as I put this chart up now, we've got 3 layers of edge, because let me find a better, there we go. We've got 3 layers of edge. Number 1, we can all see downtrend. Good to have that on our side. Number 2, we've got this candlestick pattern. We've got this kind of wick to the upside, this intraday change of sentiment. But also, number 3, if you look closely, let me get it back again. Look closely, we are actually at a level of resistance, and we just poked above it. Lovely setup. So we're stacking 3 layers of edge. If we go back many slides, which I won't do, we talked about selling at resistance in a downtrend, far more powerful than selling at resistance in an uptrend. So now we've got that. We're in a downtrend, check. We're now selling at resistance, check. Not only that, but we've also seen the candlestick pattern that we know works well even isolated on its own. So if we add it, we're stacking 3 layers of edge together. A lovely, much more high probability chance of success. Is it going to work every time? No, it's not. But it's going to be more, it's going to give us more chance of success than if we just did this candlestick on its own, if we added these layers of edge together. So this is kind of the point I'm trying to get across. And if we look again at the same bearish candlestick pattern, but in an uptrend, it's nowhere near as powerful. And yes, I realize, appreciate there are some there, you might have one here, but the idea being that candlestick there that I've literally got the arrow right on, and you can see, is identical pretty much to that Twitter one, right? I'm pretty sure you'll agree. But because we're in an uptrend, it's nowhere near as powerful. It's not giving us that extra layer of edge. And okay, maybe if we took it we might just about get an edge out of it, or might get a little bit of shrapnel from it for a day or two move. But the theory is that we align ourselves with the trend and then we add that candlestick pattern on top. Okay, let's move on to something else now, guys. I think we're going to get the concept of that. I think you kind of understand what I'm trying to get across there. Any questions or comments, stick them in the comment section below as always. Okay, the next edge that we talked about is a reprice scenario. So a reprice, being just a recap, is something that comes along and changes the ultimate valuation of the stock, the index, the currency, whatever it may be. Something that people say, hey, you know what? This is now a binary event that has changed what I perceive the value of this to be, positively or negatively. A great example here. Trump wins the US presidential election. One of his kind of policies is for infrastructure spending. And the idea, the theory here is that US steel is going to benefit highly from this new kind of infrastructure spending spree. Obviously producing steel, steel required for infrastructure, pretty self-explanatory. So we get this reprice scenario where Trump wins, we gap up, and all of a sudden US steel becomes far more valuable. So whilst it's difficult to find a kind of support buy here, because there wasn't really that much support, it was just pretty much ripping to highs. If you look closely, again, aligning ourselves with assuming a reprice to the upside is bullish and it's an edge in itself. Now let's add that support buy to it. All of a sudden we have got, let me flip that actually to a line, levels where we've got little support levels, only minor support. If you're looking at a daily, a 5-minute, 15-minute, you'd see them, more clearly if you were day trading a bit more actively. But see how, these little support levels hold as we go up. This is a little gap down here, the push to highs. Of course, you're always going to get this, but you've got this resistance that turns support here, which held twice. Oops, I've just moved the. There we go. You aligning yourself with the trend. number one. Actually, no, the reprice is number one, isn't it? Then it becomes a trend, number two. The reprice kind of drifts off as your trend becomes more and more. It becomes less like a reprice and more sort of cemented supply-demand imbalance. And then you're looking to buy support as opposed to selling at resistance, because remembering the definition of a trend is that the resistance is broken, 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 broken. New highs, new highs, new highs. Okay, so that's the concept of kind of adding the layers of edge together, the reprice scenario. Another one I've got for you now on the bearish side, just to keep it balanced. Foot Locker. Foot Locker came out, earnings were less than expected, something to do with Nike going direct to consumer, whatever, we don't care as traders. The point is, way less than expected. You had a reprice scenario, a gap down, a hold at lows. The new thing that suggested Foot Locker was no longer worth $72, it was worth $60. So pretty aggressive reprice. So we hit the reprice scenario. We're not allowing ourselves short, but we don't want to go in straight short. We want to add this layer of edge together. Where can we find a way to go in? Okay, candlestick pattern maybe, sell at resistance maybe. Look, resistance here, far more chance of success than us buying at support if we continue to do it. And you can see selling at resistance worked very nicely at the multi-day kind of resistance level there, and then the deeper kind of cycle over the month period hit the resistance and ultimately gap down again because earnings were pretty poor. But the point is aligning ourselves with the reprice, then the trend, then the resistance. If we do this continually, this is how we're going to make have a higher probability of success. Another one, let me just move this chart out of the way so we can see. This is a completely different one, guys. This is when we have sentiment heavily skewed. Everyone is bearish on Snapchat. Everybody's completely bearish. You know, sentiment skewed in one direction. Snapchat's going to the dogs, whatever. Regardless of whether it will or not long term, the point is everyone's positioned in one direction. All of a sudden, earnings come out at gaps lower. Then we get a candlestick pattern that engulfs this price from before. Now, those of you who are watching this, I know you're saying to me, but hey, Mark, listen, this is a downtrend. This is a downtrend. I'm not aligning myself with things. I get that. And this is kind of why I've included it, because there are areas of grey. To me, the downtrend is there, and I believe, yes, we want to align ourselves with the trend. But to me, the one that's got more weighting, is kind of the phrase I'm looking for, is that the sentiment is so heavily skewed that there's a chance this thing could snap back. And so I'm looking at this saying, hey, the sentiment's heavily skewed. Now, is there any kind of bullish pattern that we can see that might align myself with that theory, that if I fade the crowd now and I get something else, I add that layers of edge? And this kind of maybe blends itself into a little bit more of, you know, the risk-reward ratio is higher than the probability of success. Okay, the risk reward, we can cap it here and we can put ourselves a little stop under the low and it's all looks very nice. And yes, the downtrend may just succumb it and push us to lows. But again, I'm kind of adding these things saying, okay, well, I know sentiment's heavily skewed. A lot of people are short. Earnings have gapped down. But now the next day, we've got a really nice engulfing candlestick pattern, you know, another layer of edge. I can probably have a go at this. I can cap my risk below the low. I give myself a chance of success because I'm stacking the layers of edge, appreciating that the downtrend is still there, but stacking the layers of edge. All right, guys, stay tuned. If you like this video, give it a thumbs up. Don't forget, last video coming up where we talk about the best layers of edge, in my opinion, to combine to kind of isolate into strategies and how we can move forward and implement it into your own trading. Take care.